Tesla stock did it again, bounced right on the 100-day moving average. What does this mean for the next couple of days or the next couple of weeks for Tesla stock? It's very encouraging. Now, a lot of analysts on Wall Street are starting to lower their estimates for Q3 deliveries. Now, this is as to be expected. But this particular analyst that has a $350 price target on Tesla has some very bullish things to say in regards to margins as well as delivery growth in 2024. He's expecting it will far exceed analyst expectations as an average. So we're going to go ahead and get into that. We're going to talk about everything happening in the markets today as well. If that sounds like something you want to listen to, be a part of, hit that like button as well as subscribe to the channel to stay up to date with future videos in hopes it helps you make more money. So the first thing we're going to start with is some pretty good news in regards to Dojo. Apparently, Tesla doubles the Dojo D1 supercomputer chip order with TSMC. Tesla also plans to continue to increase their orders into the future. According to a report from the Economic Daily, Tesla is doubling its order for this year from 5,000 to 10,000 units of the D1 supercomputer chip, which serves as the heart of their Dojo supercomputer. This is just for this year, with Tesla expected to order even more of the D1 chips in 2024 and into 2025. News of these increased order volumes came from a source, and neither TSMC nor Tesla have commented on this story, but the two companies have worked together before, most recently on both its hardware 4.0 self-driving computer and already the next generation hardware 5 computer. As you guys know, Dojo is a key component to training full self-driving, as well as the NVIDIA H100 cluster, which is worth about $300 million. Point is, the more chips, the better, the faster we get to a full self-driving vehicle and ultimately the robotaxi network. We also have Giga Texas news. All employees are back at work today, training, final prep, test production of the Model Y bodies, and at least 2 master candidate Cybertrucks produced an image today outside. This week will be to get everything back into operational status to resume full production by next week. If you take a look, here are some of the pictures. This one is notable. We'll come back to this here in just a second. I mean, quite a bit of work looks like is being done out here. And as you can see, the parking lot is starting to fill up again. Tesla Roddy says Tesla's latest Cybertruck units show impeccable build quality. They say with the Cybertruck heading toward initial deliveries, as Tesla still plans to start with them before the end of the year, things are getting interesting on the Giga Texas property. These Cybertruck units are a validation of those new production lines and will not be delivery candidates, according to Gregor Truck, a Cybertruck program insider. These will make way for the next Cybertruck production units, which will be known as Series 9 and could be the first handed over to customers. The insider told us that the Series 8 Cybertruck units could be the ones that end up in showrooms, as Tesla will begin to get those into locations across the United States, likely in the near future. As for Giga Texas, production should be back up to normal rates by next week, as the stoppage will take a few days to recover from. Tesla is building Model Y units at the factory, as well as these early Cybertruck units. They also go on to reiterate some of the news we covered yesterday, that Tesla, well, Elon Musk specifically, just revealed that Tesla will have a performance trim of the Cybertruck, giving us a hint at what configurations of the all-electric pickup truck might be available at first deliveries. Troy Teslike has updated his estimates for Q3 delivery numbers, and it sits at 442,000. Now, if you guys look up the video I made, just look up Q3 Tesla delivery numbers, and you're gonna find the video that I just put out like 2 days ago. I actually run through the calculations, What I got was around 434,000 units, but I did say we could be in that range to maybe 440,000 units. If we're higher than that, I will be quite surprised. This is taking in all of the insurance registration numbers that we typically see from China as well as Europe, and extrapolating those numbers. And then the US is really the wild card here. If we get a number that's higher than 440,000, it's likely because the US seeing increased deliveries, and hopefully that's good running through some of that backlog of inventory, right? That's one of the big things a lot of analysts like to point out, especially the Tesla bears. They'll sit here and say Tesla has 19 days worth of inventory. They're not selling all of the vehicles they produce. Well, that's one good thing coming on Tesla's earnings that could actually help out profit margins quite a bit. Tesla ran through all of their inventory, so they're not going to have any inventory. They're probably going to have like a day or two worth of inventory, like nothing. So that money Tesla already spent to make those vehicles, well, should help them quite a bit get their profit margins higher in this next upcoming quarter. But point is, the US usually has about 30% more deliveries than China. If that number is 35 or 40% this quarter, well, that's where you get that beat above 440,000 units. Now, this analyst writes an article that says how Tesla stock can weather a material miss on third quarter deliveries. A few weeks ago, Wall Street was projecting Tesla would deliver 473,000 units for the third quarter. Now the consensus view among analysts tracked by FactSet is 2.5% lower at 461,000 units. That's what's kind of wild about Wall Street. Last quarter, we produced 466,000 units, and that was a record, and Elon very clearly over and over again stated on the earnings call that deliveries would look not as good in the third quarter due to factory shutdowns to get ready to produce the Model 3 Highland, the Cybertruck, and yet Wall Street still expected another record quarter of deliveries. So estimates have been coming down, and I think it's very well interpreted that we're not going to hit 461,000 units. But I believe that is already being priced into Tesla stock right now. I think that's the reason why we ultimately fell from almost 280 down to where we currently are now, in the 240, 250 range. But this analyst goes on to say, this specific analyst, his name is Pierre Fargu. He's from New Street Research. He expects 438,000 units, about 5% below the current consensus call. Quote, factory shutdowns to drive material miss, he wrote in a Friday research report. Maybe that's why Tesla stock was down over 4% on Friday. You were just pricing in a lower than expected delivery number. That would make sense to me. He goes on to say a result of 438,000 cars would be down about 6% from 466,000 units delivered in the second quarter, but up 27% from the 344,000 units delivered in the third quarter of 2022. So your year-over-year growth is still, even if Tesla comes in lower than 430,000, going to look really, really good. He writes, a big shortfall wouldn't necessarily be a disaster for the stock. Quote, we believe the miss is well anticipated by both the buy side and retail influencers, Fargu wrote. That's like me and you and Troy Teslake and all these other guys that we're not expecting 460 some thousand deliveries. We're not even in the 450 range. I'm in the 430, 440 range. We're way lower than Wall Street is now. He doesn't expect the delivery number to be positive for the stock, though. Overall, the situation appears stable, said Fargu, and our thesis is unchanged. He sees Tesla sales volumes growing about 50% a year on average for the coming few years. He predicts that the company will lift gross profit margins in its car business back to 25%, recovering from a decline this year that resulted from Tesla's price cuts. Gross profit margins in the second quarter were about 18%. If gross auto margins get back above 20%, analysts are going to be very happy about that. If we get to 25%, That is your bull thesis coming to life next year for Tesla. That would be Tesla in the high threes on a fundamental basis, just trading at the same multiple we are at now. If Tesla comes in at 50% deliveries, well, my calculations would put Tesla stock over $400 per share. And I also broke that down in that same video that broke down the delivery estimates. Farragut rates Tesla stock a buy. His target for the stock price is $350. This is a 12-month price target. You guys have to keep in mind that Wall Street is only expecting 27% delivery growth for next year, and they're not expecting 25% gross margins. So Tesla stock gets back to all-time highs, even higher than all-time highs next year. If you get 25% gross margins and 50% delivery growth, that means analysts are 1,000% false on Tesla's estimates right now for next year. That would prove the analyst very wrong. And even with the current multiple that we have on Tesla stock today, a little bit over 70 for next year's earnings, well, those earnings could come in much higher than Wall Street's estimates. It's also notable to point out 41% of analysts covering Tesla's stock rate shares a buy, whereas stocks in the S&P 500 have an average buy rating of 55%. So if Tesla does start to come in better than analyst estimates, well, you're probably going to get a lot more kind of analysts raising those price targets, but also taking Tesla stock maybe from a hold to a buy, which should also be very good for Tesla's share price coming next year. In other Tesla stock news, you are seeing the Highland that has officially started to hit these stores in China. And take a look at these people's reaction. This is from Tesla Chan over here on Twitter. And there is a lot of excited people when they are seeing this vehicle for the first time. It also looks like the Cybertruck is pretty maneuverable. If you take a look at that, it looks like the Cybertruck just backed into a garage here in San Francisco, which is not a big garage, so pretty maneuverable, I would say. Now, we are going to get into what's happening in the broader markets, and then we're going to look at Tesla's technicals and some of the option activity that we are seeing today. Now, we didn't get a lot of economic data today, but we did get the Dallas Fed manufacturing at 10:30 a.m. this morning. This came in worse than expectations. Last month, you were at negative 17.2. You were expecting negative 10, and we came in at negative 18.1. This really flies in the face of the economy is doing so well as the Fed thinks. Now, as you guys know, the big economic data is going to be on Wednesday, Thursday, and Friday. But tomorrow we do have some economic data as well, like the housing price year over year, the S&P Case-Shiller home price, and Richmond Fed manufacturing data. We also get the Dallas Fed Services Index. That could also be important, but let's just be honest with ourselves. The Fed is incompetent here. We're heading into a recession. I don't really think any of this matters at all. I think the markets are just pricing in a recession right now to some degree, and once we start to get more recessionary data, the markets will price that in further until the Fed ultimately gives us emergency Fed rate cuts. That's how this is going to play out. 10-year Treasury yields are up 10 basis points today, and your 2-year Treasury yields are basically flat. So you are seeing the long end of the curve. Well, rates are going higher where the short end is staying the same. That means you're getting an even steeper yield curve uninversion today. As you guys know, and as we have talked about many times here on the channel, unfortunately, this is only updating for September 22nd. But today, you are seeing the yield curve, which is steepening. Now, as we've talked about many times, when the yield curve inversion starts to uninvert, that's usually right before a recession. Usually you can see you start to rise here right before a recession, and that is happening right now. As you guys can see, if we look at the Fed Rate Monitor tool, for June 19th, 2024, there is a 33% chance of our first rate cut. There's a 37% chance we do not get a rate cut up until June, and then July, you're actually pricing in your first rate cut for this hiking cycle in general. With a 34.9% probability, there's still a 26.9% chance rates stay unchanged through July of 2024, and a 21.2% chance we have 2 rate cuts by July. So you're so far priced out as far as rate cuts. If we start to get bad economic data, we could actually get emergency rate cuts. And you might ask, why is this? Well, usually, besides back here before the 2008 election, you've never seen another rate cut right before a election. You typically see rate cuts right before election. You normally don't see rate increases. I think I said cuts, but you usually don't see rate increases during an election year. But a matter of fact, since 1900, only one president has won re-election during a recession. William Taft in 1912, Herbert Hoover in 1932, Jimmy Carter in 1980, and George W. Bush in 1992 were all unsuccessful because nobody wants to vote for you if the economy is in a recession. People don't vote on who has the best policy or not. Most of the time, people vote on a new president based on how the economy is and how they perceive the economy. So if we start to go into a recession from now until the election, you will see massive rate cuts because the odds the current president gets reelected if we are in a recession or just in a weak economy dramatically fall. You are seeing the price of oil is down about 0.37% today, which is good. Since 1945, any recession you have seen, well, it happens right after a spike in oil. We have seen a 35% rise in the price of oil recently, so I would categorize that as a spike, but usually it's a larger spike, at least what we have seen in recent history. So as long as this doesn't continue to rise, then maybe that's a good thing as far as we might not be going into an imminent recession. But then again, the bond market is 3 to 5 times larger than the stock market, and they tend to be correct. When the yield curve starts to uninvert, you're typically heading into a recession. So you usually want to listen to the bond market and forget about anything else. That's a good investment thesis to go with. As far as Tesla stock, the Google trend data is continuing to spike higher, especially for the Model Y and now for the Model 3 yet again. We did report that your Model S and your Model X search trend data has been falling over the past week or so, but again, your Model Y and your Model 3 is continuing to increase, and you are far above search trend levels that you were at back in the fourth quarter of 2022, which is always the best quarter of deliveries for Tesla. So I think Q4 is going to be a good one. As far as Tesla option activity, the buyers are coming out with a positive order value of 59%. This follows yesterday's positive order value of 78%. Some remarkably bullish last 2 days of trading that we have seen for Tesla's options. Today, you have seen 735 orders totaling $537.89 million with a positive order value of 59%. The dollar amount that is currently sold short, $20.6 billion. Now, for reference, Apple, Microsoft, Nvidia, Google, Amazon, much larger companies as far as a market cap are 50% less short. So this just means any good news we get is going to be amplified, especially if shorts do start to cover on short positions. Any bad news we get, well, more shorts are going to pile into those already very large short positions. Tesla's technicals are very encouraging on the day today. Last time we tested the 100-day moving average, you fell under back here on August 18th, and you were down about 3%, when you touched the 100-day moving average, you fell another 2% the next day, and then the next day you rose 7.33%. It was like once you hit the 100-day moving average, the buyers came in full steam ahead, and that's exactly what happened today. Your 100-day moving average was at $239.14 per share. You actually hit a low today of $238.31. And Tesla stock at the time of recording this video is at $245.72. You have bounced a solid $7.40 from the low you seen earlier today. The buyers came in, you hit the demand zone. This is a very, very positive sign. But again, if the markets do fall, it's not going to matter what happens on Tesla's charts. If the markets fall, if we don't get good news out of Tesla, Tesla is also going to fall, and likely much more than the broader markets. If we pull up some of the indicators, such as the MACD just recently went negative again as Tesla stock has been falling. The yellow line has broke under the blue line, and you are starting to trend to the downside. If you look at the RSI is currently at 43.81. So you're not neutral, you're slightly on the oversold side, but it's not telling you a clear direction. You've actually bottomed out on the RSI after hitting the low back here of about 42. So you're trending up a little bit as of today. I would call the RSI neutral on Tesla. But take a look at this post. It's from the short bear. It was seen 828,000 times over here on X. So this is not, something that is a very small creator posted it. No, this is from an account with about 83,000 followers, seen by almost 1 million people. It says, if 1987 is to happen again, next week should be it. And this was posted over this weekend. He says, structurally, it's a different world, but these type of events only rhyme. Scary proposition I see all over Twitter this weekend. And if you look, this is Black Monday, where markets fell 20% in a single day. Well, that was right here. The 3 days leading up until that was quite negative. And look at how similar these charts are. It's actually mind-boggling. As you guys also know, we've talked about this like every single day for weeks now, since September started. But after quad witching, you tend to see a lot of money moving around, going into new hedges for the next year, as well as hedge funds and institutions selling stock that they have gains in, that they want to lock in profits in. And why does this happen? Well, just like the government shuts down on October 1st, that's because 2023's fiscal year ends on October 1st for the government, for a lot of hedge funds and institutions. So if you want to book those profits, if you want to take on new hedges for 2024, you do that by this Friday. So especially towards the end of the week, when we get into some of the very important data, like Wednesday's durable goods orders, Thursday's speech from Fed Jerome Powell, and Friday's personal spending, personal income, and PCE data, it could have a very big effect on the markets. I don't know if Black Monday or a Black Swan event is going to hit the markets again, but from the look of the chart, I mean, I would be hard-pressed to sit here and say we see a big rally from here. If anything, you probably get more downside. Just structurally speaking, that's what makes sense to me. And last week and this week are the worst weeks for any year in the markets, let alone, again, a year in which 2024 looks almost certain to give us a Fed-induced recession. The last thing that we are going to cover here in this video is kind of continuing on the news that we went over yesterday, that all in all, these strikes so far have had a net impact to the automakers of about 1.6 billion. As you know, about 6 jobs rely on every one UAW job, so that number is probably close to 7 to 10 billion of a net drag on the economy. Well, Ford says significant gaps remain in UAW labor contract talks. So this good news that we had heard about Ford not seeing additional facilities going on strike, kind of got rolled back last night. This UAW strike, if it continues a couple more weeks and we do see a government shutdown on October 1st, a recession becomes a lot more likely. So that is going to do it for this video. We have another very important video coming out at 9 p.m. tonight, so I highly recommend you guys stay tuned to the channel for that one. But that's going to do it for this one. Hit the like button and subscribe to the channel if you made it to the end of this video, if you learned something that you found interesting or you did not know, or if you just want to stay up to date with everything going on in the markets as well as with Tesla stock each and every single day. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.